Hey, so there's a lot of stuff going on, really in the media and different real estate reports, and people are asking, they're like, well, what's going on with the real estate investor? When's the real estate investor going to return? Because that's what the market needs, especially like the Toronto condo market. If the investors aren't buying, then these units aren't selling. And I guess, there's kind of a couple ways to look at this, and I think we got to dive into this a little bit because there's two different ways that people have really been buying real estate over the most recent years, okay? There's what you would call speculators, so we'll call it spec, right? And then there's the investors on this side. And what I mean by speculators is the speculators are people that really aren't investing. They kind of got a little bit of FOMO, right? Fear of missing out. They saw property prices going up. They're like, oh my gosh, I need to buy something. Because if I buy, it doesn't matter what I buy. So if I buy a little house, if I buy a little condo here, whatever it is, I just want the price to go up. The price is just gonna go up. I'm not gonna do any research. I'm not gonna think about what I'm buying, what the floor plan is, how many square feet, if I can put additional units in the properties. I'm not gonna look at economic activity in the area. Maybe I'm not even looking at rents. I just think that I'm gonna buy one of these because the price is gonna go up. And that's it, that's the speculator. But the difference is with an investor is investors really haven't left the market. Investors are in the market right now. They were in the market 10 years ago, 20 years ago, 30 years ago. They've been in the market 5 years ago, 3 years ago. Right today, people are investing. And there's a difference because investors, they're buying a property here, right? And I guess this is the way we look at things. So you can kind of, decide how you want to look at things. So investors are here and they're holding this asset for the long term because what they're doing is they're putting they're putting people into this property. And this doesn't have to be a house. This looks like a house. It could be a plaza. It could be an apartment building, whatever you want. But they're putting tenants into this property. And the tenants, when they're living in the property, they're ultimately shelling out the dollars for this property. But the title of this property is over here. It's owned by the investor, right? So how do we do that? That's the title. So the investor owns the property and they're renting out this property. So this is now a self-liquidating asset, meaning that the asset ultimately is paying for itself because the investor, hopefully the investor before they bought, they ran numbers on the property. They're like, hey, what are the rents on the property? Can I do something to increase the value of this property? Because the value of the property is often assigned, kind of calculated based on the income that the property is generating. So if you have a commercial plaza, well, maybe you can get higher grade tenants in there with longer term leases and raise rents. And that way you're increasing the value of that property. No different than if you have a single family home, maybe you can put a second unit in it and then you can increase the value of that property by increasing the income on the property. This is the difference between investing and speculating. And when people are talking about real estate and what's going on in the market, they confuse the two and they don't separate the two. So yes, speculators are out of the market because property prices aren't going up 5, 10, 15, 20% a month, right? It was insane, it's not normal. But investors are in the market and we're seeing investors every single day and they're contributing to the market today. But they just have to do a little bit more work. It's kind of gone back, almost back in time to what real estate investing used to be before everyone thought it was just easy and you bought any piece of real estate. You could buy a parking spot and then you could sell it for more 2 or 3 months later. It didn't make any sense. So that's the way that we look at speculating versus investing, and that's what's going on in the market today. So when you see headlines and you're trying to understand what's going on in the real estate market, realize that when people are using the term investor, sometimes it's not really completely accurate. So that's what you have to realize, because some people, they'll call investors when they're just really speculators. We saw people, to give you context, we know people that they were leaving the country, they're foreigners that were in the country, and when they were on the way to the airport, they took a detour to a sales office, a condo sales office in Toronto, and they said, you know what, let's buy 2. Just like that. They just bought 2. They didn't know anything that was going on. They just bought a couple condos.
This fall, the Empire is back, but so is the Resistance. On Saturday, October 18th in Mississauga, it's the Your Life, Your Terms event, Ontario's most energized gathering of real, in-the-trenches investors. This is the Resistance in action. 1 day of real strategies, fresh ideas, and new allies who believe in living life on their terms. The lineup, out of this galaxy. Ben Rabideau with the sharpest real estate and economic data, Tom Karadza on global forces reshaping Canada's future, Nick Karadza on the money revolution changing finance forever, Dave Butler with 5 game-changing investor mortgage programs, a powerhouse panel delivering blunt, on-the-ground real estate insights, Tom and Nick on launching and scaling income streams for freedom, Dr. Caitlin Link on taking control of your health and fitness. Past attendees call it a must-attend, electric, and say they've walked away with tens of thousands of value from a single day. Ticket prices rise as the event gets closer, so the earlier you grab your seat, the more you save. Some tiers include extra bonuses you don't want to miss. So the question is, will you sit back while the Empire makes it harder for everyday Canadians to get ahead? Or will you join the resistance, take your seat, and rise above the system? Go now to yourlifeyourtermsevent.com and grab your ticket before it's gone. That's yourlifeyourtermsevent.com before ticket prices rise. If you're a Rockstar member, your ticket is free.
We know local investors did the same thing. Didn't know what was going on. They're just like, I don't know, I saw property prices going up. I felt like I had to jump on it. And so they jumped on it, they bought a couple properties, and the prices haven't gone up where they thought it was going to be. And now they have to reshuffle their portfolio. At the same time, in today's market where people are like, hey, investors have disappeared, they're non-existent. We're seeing people do this type of thing, and they're creating huge cash flow numbers for themselves. Off like single properties, they're getting I think $1,000 in positive monthly cash flow in areas outside of the GTA even. So there's all sorts of opportunities available to you when you understand what's going on. This is the way that we've always focused on. We kind of like, we saw what this did. Specifically in the Mississauga area. We grew up in Mississauga. So in the Mississauga area in the early 90s, in the condos around like Square One area, Webb Drive and those types of things. And we saw what happened when people just speculated and the property prices got out of hand and how long it took to recover. So we've always kind of shied away from this type of thing. Our family was involved in this type of thing, hurt them financially as well in the same time frame. So maybe it scarred us a bit. So we've kind of always shied away from this, but this is kind of what we focus on. And this is what we've helped investors focus on. It's cool, because we've seen them get really, really cool results. So when you're looking at the market and when you're talking about investors or people are talking about investors, we would suggest like, hey, you know what, separate the two conversations. It's really valuable. Lots of opportunity left in any markets all over the place for you if you're doing your due diligence and doing it right. So let me give you an example, right? We have this property here, one of our properties that we have. Let's put it down here. This is our little property. I always draw homes. I don't know why. It doesn't matter what the property is. And I just want to explain to you what's happened in this property. We've had this property now for about 25 years, okay? So we've had this property. Over time, I don't actually know what's happened with the price. The price has likely gone up, it's gone down, it's gone up, it's trended up over time. I know that because prices of lots of things have trended up over time, and we're gonna get into detail on that on another video. But we didn't look at this. I didn't know what was happening on a monthly basis. So when I see these clickbait headlines like, oh, property prices are doing this month, and property prices in the last month did this. Well, it doesn't really matter to me if I'm an investor because I'm not looking at it on a monthly basis. What I know is that over time, there was a mortgage on this property, so there was a mortgage. So over time, the mortgage on that property went down. It was being paid for by the people living in the property, which meant over time, the equity in that property went up from the mortgage pay down and the long-term appreciation. We can talk about inflation and monetary base, all that stuff. We'll leave that out over there. But the mortgage went down, the equity went up. As an investor, that's what I like. And on a monthly basis, the cash flow, right? The cash flow was a positive. So I have positive cash flow and long-term self-liquidating assets paying self off, and there's long-term appreciation. And then I can look at increasing the value of this property with the cash flow, or I can take an investment and I can invest into that property to get a return on that investment into that property as well. And I can do the numbers and run it on that. That's, in a nutshell, basic, that's how you're investing. So I'm not worried about the clickbaity stuff. Hey, what's going on last week? What's going on this month? It doesn't matter when you're looking at things this way. So that's the way we look at things. That's the way, we work with investors. Most investors, when they're looking at stuff, that's what they're doing. They're parking capital, looking for a return over the long term, and they're doing a little bit of due diligence, a little bit of research, a little bit of understanding what they're getting themselves into, versus saying, hey, how about I buy this thing and property price is it's guaranteed to go up, and I'm just gonna resell it and cash out. When you're looking at it, riskier strategy, two different things. I don't think it's fair to use the term investor and lump everyone here into just one bucket by using that term. So that's what we want to share today.